please. And we'll start in about 2 or 3 minutes. Thank you very much. Did you make the time? 1400. We'll start at 1402. So we're going to be starting in a couple of minutes. One minute from now, we'll start. Thank you. Okay, let's make a start. Thank you very much, everybody, for joining us. Good afternoon. I'm Martin Sherwood, and I'm from Enterprise Investment Partners. I'm here with Shane Gallwey from Guinness Asset Management. Good afternoon. And the topic this afternoon is using business relief to mitigate inheritance tax. So let's crack on. First of all, I am required to point out that this is a real-time financial promotion, so it's important that you understand the risks involved, and I just need to read this out very briefly to you. Your capital is at risk. You may not get back the amount invested. You should not invest if you are likely to require capital in the near term. Past performance is not a reliable indicator of future performance. Any stated returns are for illustrative purposes only, and no forecast is implied or should be inferred. Tax legislation can change and depends upon personal circumstances. And finally, tax reliefs are dependent on the company or the companies maintaining their qualifying status. So thank you for your patience with that. Moving on now to the next slide. A little word by way of introduction to Enterprise Investment Partners. Some of you will know us, some of you may not know us very well. This is going to be literally 90 seconds. So we set up Enterprise about 6 years ago, and I and my fellow partner Christian Elms, we left Smith & Williamson and established Enterprise Investment Partners. When we started, we thought we needed to be a little bit different. And our key differentiators, if you like, are firstly that we believe in staying with the money all through the process, so raising the money, managing the money, and exiting the money, and providing a high-quality investor relations service during the term of the investment. We believe in total transparency, so that means providing as much information to investors before the investment and during the term of the investment. And last but not least, engaging with top quality asset managers only. So Guinness Asset Management is a case in point. Now, Shane is going to give you a quick little introduction on Guinness.
Yes, good afternoon. As Martin mentioned, I'm Shane Gallwey from Guinness Asset Management. We are a institutional fund manager. We have just short of £1 billion under management, invested across a range of areas. Our core areas of expertise include energy and alternative energy, investing in Asia, and investing in innovation as well. I set up the EIS and IHT side of Guinness Asset Management in 2010, and since then we've made over 60 million of investments into EIS and business relief qualifying companies. And last year we exited our first investments, returning £1.24 to investors for every pound they'd invested. And these were companies investing in roof-mounted solar. And on this slide, you can actually see a couple of photos of roof-mounted solar installations that we currently own on factories in the UK.
Excellent. Well, thank you for that. Now, this is the agenda this afternoon. We're going to be talking about inheritance tax first. What is it? Well, a lot of you know pretty much that, so we're not going to dwell on the detail very long. We'll skip over it. Then we're going to talk about business relief and the benefits of business relief for exempting you from inheritance tax. And then lastly, towards the end of the presentation, we're going to be focusing on the offer that we're both working on currently, which is the Guinness Sustainable Infrastructure Service. So moving on. So inheritance tax then, what is it? There's a thing called the nil rate band, which is still at 325,000 per individual. That's 650,000 for a married couple. The nil rate, anything above the nil rate band is chargeable at 40% on death, when on the death of the second member of the married couple. So just a quick word on how much IHT delivers to the Exchequer. You will see there on the left-hand side the green graph, and there was a big dip round about the time of the recession. People's portfolios were worth dramatically less. But in recent years, the amount that HMRC have recouped from inheritance tax has been going up steadily and is now currently around about 4.7 billion mark on an annual basis. Now, I think as some of you know, the government has recently announced the introduction of something called the residence nil rate band, but that's being phased in. So that's not available yet. It will start to be phased in next month. And it's going to take the nil rate band up from the current 325 in stages up to a total of 500,000 per individual, i.e. £1 million per couple. And the extra allowance, of course, is relating to the family residence. So there needs to be a principal residence, which on the death of the second spouse is then passed on to the heirs of the estate. Okay, moving on. The various options mitigating IHT, well, there are several, but we've summarized this a bit here. Gifts is one of the most obvious and one of the most historically most used. However, gifts do require 7 years, a taper of 7 years before they fall outside of the estate. Very often people, by the time they've decided they're going to make a gift, they're quite elderly and they don't survive for a further 7 years. So it's 7 years is quite a long time. People often use trusts as a vehicle as well, but again, they are subject to the 7-year taper rule. And also there's the possibility of loss of ownership if you put money into a trust. So that is a key factor to be considered. So thirdly and finally, business relief. So this is something which is available when you invest in BR eligible companies. And the key thing here is that it requires only 2 years from the date of the issue of shares for those shares to fall outside of an estate for inheritance tax purposes. An added benefit is you retain the ownership and you retain access to your assets and control over your assets during that time. So really quite important. Moving on to the next slide. I'm sorry, I'm having a bit of a... Right. Business relief. Now, business relief was introduced in 1976 to enable family businesses to be passed on free of inheritance tax. It's a key relief reducing the value of IHT charged on an individual's investment in businesses and or assets that qualify for business relief. It can be claimed on death, providing assets have been held for at least 2 years. There are significant savings. This slide actually includes both 100% relief and 50% relief. Almost invariably, most of the cases you'll be dealing with are subject to 100% relief. There's a small minority which are subject to only 50% relief. That relates to shares controlling more than 50% of the voting rights of a given company, shares in land, buildings and machinery owned by the deceased and used in the business, land, buildings and machinery used in this business and held in a trust. So they're all subject to 50%, but normal estates will all be subject to 100% relief. Okay, some exclusions though. So what is a business relief company? Well, the key thing is it has to carry on a normal trade. And the trades which are excluded are investment activities. So a company which deals in securities, stocks or shares, land or buildings, or the making or holding of investments does not qualify. Not-for-profit organizations also do not qualify. Businesses being sold unless the sale is to a company that will carry on the business, and businesses being wound up. So to sum that up, without wanting to confuse you, if it's a normal trading business, it will qualify. If it's an investment business, it will not qualify. And BR business relief cannot be claimed if agricultural relief is also being claimed. Business claim on an asset if it wasn't used mainly for the stated business in the 2 years before it was passed on, or for future use in the business. So that's all a bit technical, but broadly speaking, the main thing to retain is as long as it's a normal trade and the company carries on that trade uninterruptedly, then it qualifies. Okay, so considerations for you. Business relief in three key points here. It's a traditional gifting strategy, providing only 2 years from the date of the issue of the shares to the time when it falls outside of the estate. That's dramatically better than 7 years, which is the traditional length of time. So 2 years versus 7 years. Secondly, the ability to maintain control and ownership of the investment. This includes the option of monthly, quarterly or full cash withdrawals should you require access to funds. And a very important point, the third point, which is that there's no requirement for the holders of these shares to be involved in the business in any way. So they can be completely passive investors. So it's unlike active partnerships or some other structures where there's a requirement for the investor to be involved in the business. Okay, so, Shane?
Yeah, so this is a slide on business relief in action. And there's two examples here. Estate A, which does not invest in any business relief qualifying shares, and Estate B. So both are valued at £1 million. First of all, the nil rate ban can be deducted, so that's the £325,000, that's inheritance tax free. And then after that, the 40% inheritance tax is applied. So if you look at Estate A, it pays a full 40% on £675,000. That estate would be liable to £270,000 of inheritance tax. Estate B, on the other hand, again has the nil rate ban applied. However, Estate B invests £500,000 in business relief qualifying assets. And that reduces the amount that is liable to inheritance tax to only £175,000. So inheritance tax is paid at 40% on that £175,000, which means there is £70,000 worth of inheritance tax to be paid. So in this example, Estate B has paid £70,000 of inheritance tax, and Estate A £270,000 of inheritance tax. And that's just a practical illustration of how business relief works. So there's many trades that that can be invested in that qualify for business relief. AIM portfolios is interestingly a key area, but similarly all sorts of other underlying trades, whether they be pubs, infrastructure projects, media projects, finance and lending companies, and similarly clean energy and energy efficient companies, which is what I will come on to talk about.
Okay, so we're going to be moving on now. Just a quick little summary of the Guinness Sustainable Inheritance Infrastructure Service. So, Shane, take us through that.
Yes. So, as I'd mentioned, we at Guinness have one of our areas of core focus is energy and alternative energy. And we have built quite extensive experience in the alternative energy sector, and particularly in solar. We have, within solar, we focus particularly on roof-mounted solar investing. And we like putting solar panels on roofs, and for a couple for three reasons illustrated here. So, first of all, it gives us someone to sell the electricity to, and you can sell electricity to the business beneath the roof, as opposed to putting solar panels in a field, for example, where electricity needs to be sold to the grid. And therefore we can sell electricity at a higher price, and that results in higher revenues. A second reason why we like roof-mounted solar is that there aren't grid connection costs of connecting, say, a ground-mounted project. Usually these businesses are already grid connected, obviously, and have decent-sized connections to the grid, enabling no additional cost for installing the solar and connecting to the grid. And thirdly, because they're roof-mounted installations, there's no additional environmental or planning concerns. Most of them are classified as permitted developments, and therefore can be installed without planning permission. And the installation you can see in this photograph is actually at the BMW Mini plant, which is at Cowley, just outside Oxford. It's a 3 megawatt installation, and while it provides only a fraction of the electricity used at this plant, it's a good example of a roof-mounted solar project with a blue-chip counterparty. So, some highlights of our Guinness Sustainable Infrastructure Service. We're focused on renewable energy, and particularly on roof-mounted solar. A core focus of this service is to focus on capital preservation as a key component of the service over growth. So this is not a high growth investment area. It has very predictable cash flows over the long term, which is what we like about it, and that provides comfort from a capital preservation perspective. And most of these projects will qualify for 20-year subsidies. They usually have 20-year or longer leases over the area that they're installed. So, for example, a roof-mounted solar installation will have a separate lease over the area it's installed, registered at the land registry, which gives certainty over title, and therefore is not considered part of the assets of the business that may own or rent the building. And of course, once the shares in the investee company has been held for 2 years, then they'll qualify for business relief, so fall outside the estate of inheritance tax purposes. In terms of liquidity, we have quarterly share issues and redemptions. We do ask investors, we say there's no redemptions for the first 12 months of investment. We have a strong pipeline of projects, both large and small, to invest in. Some of them new installations, many of them existing installations, which are acquired from third parties. And we look to align our interests with investors. We have no upfront fees for advised investors, which sets us apart from many similar services. And our performance fee only applies providing we exceed a minimum target annual return of 3.5%. The service is structured as a discretionary managed service, and as I mentioned, the focus is on capital preservation. Now, the service does not pay dividends. However, we do encourage investors who are looking for an income to they can apply for ad hoc or regular redemptions to allow for an income from the service. There's a minimum investment of £25,000, and we facilitate advisor charges. And we are targeting return of 5% per annum, and that's as I say, we're targeting capital growth. And the installation on the left is on a distribution centre in the Midlands, and it's I think it's approximately a 4 megawatt installation, which makes it one of the biggest in the country. Roof-mounted installations.
Okay, thank you very much, Shane. Anything else to add on the product, do you think, before we move to Q&A? I think you've covered most of the points. So just to reiterate one of the key selling points, which is the no upfront charges for advised investors, which we think is a very strong point. So when you're looking at what to invest in this very crowded market, I think fees is a very important issue. We also like solar power generation. We think it's something that's very simple, that people understand. A lot of investors got very comfortable with solar during the years that it was possible to invest in solar through the EIS, so they understand it. I think the concept of commercial rooftop, where you're putting panels on a factory roof, the factory is very simple to understand and explain, and the benefits are really clear. So we think the Guinness offer has a lot of very attractive, unique, should I even say, characteristics. So, ladies and gentlemen, thank you for your time. Q&A now. So, if you have any questions, can you please send them through to us, and we will happily answer them. My colleague has just come through with one. So, Gary, you're saying, I assume the BR shares are valued at NV at the date of death. I think that's supposed to be NAV, isn't it? In the example,
NV or market value?
Market value, okay. In the example of the 1 million of assets, include the 500k of BR assets. So we think that's market value.
Well, if that's how the question is intended, then yes, absolutely. And using our Guinness service as an example, shares are valued quarterly. So if a investor was to die, then the shares are valued at the most recent valuation point for the purposes of probate.
So I think the next question means, in the example of 1 million of assets, is the 500 of BR assets included?
Yes. So in that example, the estate was had invested £500,000 in business relief qualifying assets, which had then been held for 2 years. So it was assumed there was no inheritance tax on those assets.
So just to repeat then, so you all understand, every quarter there are valuations, and every quarter also there are what we call liquidity events. So that means an opportunity for people to either be admitted, to acquire shares in the company, or indeed to exit in order to produce some income. So it can either be, the income can either be on a regular basis, or it can be on an ad hoc one-off basis. So somebody might say they want it once a year or occasionally. Other people might say they want it every quarter. Now we've had another question from Charlotte. Are there direct shares for this, for cases where there is a power of attorney, where we cannot use discretionary services? Shane, do you want to help that one?
I'm actually not sure of the answer to that, Charlotte. We run our service as a discretionary managed service, so I think the question might refer to what permissions are, or what investment classes are allowed under a specific power of attorney. So if a power of attorney allows investments into a discretionary managed service, then we can do that. If it doesn't, then obviously the attorneys cannot invest in our service, and it is run as a service, so there are no specific investments that can be made into the underlying companies without investing through the service.
So I hope that was helpful. Any more questions from anybody? So we've done very well, actually. It's only 2:25, so it's a half-hour webinar. We've got a few minutes left if anybody wants to ask another question. We'll be here for a few more minutes. Thank you for those who want to leave. Thank you very much for your attendance, and please be in touch with us again soon. This webinar has been recorded, so if any colleagues or friends miss this opportunity, they can apply and we can send them a recording of the webinar. So you're going to be famous for a long time, Shane. People are going to be playing this over and over, I can see. Any more questions from anybody? So thank you for your time today. Really good of you to join us, and such a busy time of year. Thank you for taking the time out. So we'll be here for a few more minutes if anybody wants to ask any final questions.
Thank you.
Thank you so much. Any more questions? Anybody left? Feel free to send us a question in if you'd like us to answer it. Only 2 questions, Shane. So obviously we did a very good job. We covered all the points.
Well, Martin, I'm sure you will circulate our contact details if anyone has any further questions, and very happy to answer those.
So those are the contact details, and yes, of course. So we're still here if anybody's got any final questions they want to ask us.
I've got a question for you, Martin.
Go on then.
Do you get CPD points for this?
You do. That's something I should have mentioned at the beginning. I don't suppose there's many people left now, but yes, you do get CPD points, and we promoted that point, so a number of the people joining us will be claiming CPD. Should have mentioned that at the beginning. Thank you very much for pointing it out. Good. 1429. Any more for any more? I think that's it. I think Mark pulled the plug.
Okay.
Thanks, everybody. Bye-bye. Thank you.